Hello everybody, it's Thomas Fink, and it's Friday, October 25th, 2014. Joining me today is David Morgan, publisher of thesilverinvestor.com. David, thank you for joining us today.
My pleasure, Thomas. Thank you.
Now, before we get into the silver and gold markets, I would like to start with the equity markets. We saw the Fed come out a couple weeks ago saying the stronger dollar was a threat to future economic growth. And a lot has happened in the markets since the Fed meeting. We are seeing more volatility in the markets. The stock market sold off and then began rebounding again, and at the bottom of the recent dip in the equity markets, we saw the bond market, I believe it was trading $770 billion worth of treasuries within 5 hours. That's the highest in at least a decade. What are your thoughts on all this, and do you believe, like Jim Rickards, that the Fed might even start QE4 in 2015?
Well, first I'll go backwards. I think I respect Rickards a great deal, and I agree he's probably correct. As far as the bonds, it's absolutely a very astute situation that you remarked on, and that is, bonds, the debt market is the biggest problem, as I think anyone studies this, even at a cursory level, understands. And so when you have that kind of volume, a decade high, that's something you really have to pay attention to. And that's where, in my strong, studied view, is going to be where you see this unraveling occur. So I think that's a foretaste of what we're going to see. And since the Fed's policy now is we need a weaker dollar to sustain growth, keep this thing going, keep this Ponzi scheme alive, we're going to see the equity markets affected. So the problem is there's really no correlation that's opposite in the bonds and equities. It used to be in the old days where bonds were really contra to stocks and vice versa, but that's not true anymore. Really, it's one market. So you could have the equities coming down strongly with the bonds selling off at the same time.
Well, do you think it's fear-driven that the bond market recently had this high trading volume and that people are moving into the bond market?
I think it probably is. I mean, greed and fear are the two emotions that drive markets, and they are a lot more psychological than most people think. I mean, when I first got started, and I was very math-oriented, I thought you could do it all with, numbers and just look at certain things and, keep the emotions out of it. To be a good trader, you need to keep your emotions at bay, but markets are driven on emotion. I think it was a fear trade, really. I think it was a test. And I think the authorities, the government entities that issue these bonds probably swallowed hard when they saw that kind of volume.
What do you think interest rates will go up in the bond market? Like the market will force the interest rates up in the future when they realize the bond market isn't safe either?
I've always said that. I mean, people think the Fed has total control. I don't. They do set the discount window. They get the number of banks, which is basically all the banks, to be able to borrow from them at a certain set rate. But the market's bigger and more powerful than even the Fed, and I truly believe that. So I think at some point in time, interest rates will be forced up. Now
let's get into the gold and silver markets. They have risen a bit again, and gold tested $12.50 last week. Do you believe 1180 gold has held and that we might have seen the potential bottom here in the gold market?
Yeah, I'm getting a little stronger in my view. I've been wrong on the silver market. I was right for 14 months thinking that 1817 low intraday was it. It wasn't. It didn't hold. But gold did test that 1181 level. I think it was 1183 intraday. Regardless, it was that level. It's a triple bottom. It's come up. It's held the 1250 level. 1250 is pretty critical. It's holding that. I think the bottom's probably in here, at least for gold. I don't adhere to we've got far lower to go in those markets. I think that there's so many people saying that is a pretty good indicator that it won't get there.
And where do you see silver by the end of the year?
By the end of the year, higher than it is now. I think we'll probably get to 19, maybe 20. Hard to say. I told my subscribers that I saw 1750 as the first level to be tested, and really we've tested the 17. I probably should have been a little more conservative, but 17-ish, and that's where we've been holding so far. I think it will continue to hold, especially if gold leads the way and the 1250 level maintains.
Are you looking into any of the miners here with these low share prices?
Yeah, I love the miners here. I mean, there's just such juicy opportunities in the miners right now, and so few people are so unloved and underappreciated and oversold. There's so many out there that are really, really good. Just came in from the Silver Summit here in Spokane, Washington, and the turnout was modest. And there were some good miners there. Lots of opportunity. I'm not going to name names because it's how I make my living, but there's a lot of opportunities out there. And of course, a lot of the stuff that wasn't that viable has gone away. So your choices are actually smaller, which is really good because the ones that are upstanding and have great grades, and we just emphasized that during all the interviews I did. You get the right companies, the right grades, and you apply Archie's rule, which you can get on our website in the members section, and you know what that means. You can really still do pretty well. There's still companies out that are able to make money, but you got to get the cream of the crop. There's no doubt about that.
So what are your thoughts on the Shanghai Silver Exchange, where silver stocks have fallen 93% to 83 tons since March 2013?
Well, obviously I'm paying a lot of attention to it. I'm not sure I understand it completely. I mean, a fact is a fact. We're going to interview Chris Jansen for our members coming up, I think, tomorrow, and try to really drill down into what he's been analyzing here for months. And then there's, other guys that I know in the industry that talk about there's, kind of this cycle between, bullion to jewelry going back to bullion and coming back from exchanges and all this kind of stuff. So I really think it's important, but I'm not really going to stick my neck out and say this is going to happen. I'm watching carefully, and I need to learn more. So I'm kind of in that, let me find out even more, let me dig a little deeper, let me understand it better before I really make any kind of statement.
Do you believe that silver could be used for fighting Ebola?
Yes, I had Dr. Gordon Pedersen. I gave him 10 minutes in my 30-minute speech, and he had talked about it. It is not a cure. Again, I'll repeat that. Silver solution is not a cure for Ebola, but he talked about the potential for it to be a preventative. And I'm not a doctor. I'm not going to give medical advice. I'm not going to say much more. But the table was just flooded with people, and he was selling books and all kinds of stuff and educating people. And he's going to give me the research on it, and I'll post it for our members. I think there were 17 sites, CITES, that he had within this research paper about its effect on Ebola as a preventative, and that's about all I can say about it. But yes, I think there is something to this.
Well, it seems like so far the mainstream media has kind of ignored it and decided to fearmonger about the Ebola. So do you think the mainstream media might pick up on it?
It's hard to say. I think they probably will. I mean, they probably will discount the silver thing. It's hard to say because when the studies came out, the DoD, Department of Defense.
Yeah,
but regardless, they're going to do what they're going to do, and they're going to push whatever they want. Like with you, it's kind of overdone as far as the fear mongering. You have a much greater chance of getting hurt driving your car to work than you get Ebola, at least at the present time.
Prices of silver and gold have been kept low for such a long time, and the miners have been crushed over the last 2 to 3 years. Do you see a supply shortage coming in gold and silver here? And when it happens, will the markets reverse?
Well, I think markets usually anticipate what the future holds, so I think you'll see it come up before you get into that kind of crunch. And, to get that kind of a crunch, you're going to have to see less supply, and that means, viable businesses are close to going out of business or cutting back significantly, that kind of thing. And we've had a great growth rate especially on the silver side, and gold has gone up and flattened out here recently. But nonetheless, we've had more supply here than we did a decade ago, and that's primarily due to the base metals. It's been the commodities boom, and of course that's flattened out again and gone down the last couple, 3 years. But there isn't really, in my view, a supply crunch coming up anytime immediately. The crunch comes, what I call it that, from more demand from the investment community, and that's, that doesn't take the industrial side or the offtake from industry to make it happen. All it needs is for the safe haven trade to come back, and that can come back literally overnight.
Well, thank you for joining us today, David. It was a pleasure talking to you.
The pleasure is all mine, Thomas. Thank you for having me.